Welcome back to B Grade Economics. This is Nate here to talk to you about how Bitcoin is becoming a macro risk off asset. Now, here we see that Bitcoin is super correlative to the 10-year Treasury note yield. What does that mean? It means that at least in part, the outflows of the 10-year Treasury yield are leading to purchases of Bitcoin. Now, many would say that this is a risk on activity. However, I will show you that that is not the case, that this is purchasing an asset in lieu of the 10-year Treasury note. Here we see that Bitcoin has previously gone up when the 10-year Treasury note goes, 10-year Treasury note yield goes up. And when the blue line, 10-year Treasury yield goes up, people are selling bonds to purchase other assets. And so again, people think that this is risk on. And I would say that the previous cycles for Bitcoin probably were risk on simply because nobody knew where it was going. I would say it was reasonably factual to say that it was a risk on move to purchase Bitcoin. And so when the bond yield began to fall again, that meant people were purchasing bonds and selling assets to include Bitcoin. But as we've seen more recently, this red line is the NASDAQ. The yellow line is the 10-year Treasury note yield. What do we see? We see an inverse correlation in the risk on trade that is the tech sector. So if the NASDAQ, a risk on trade, is inverse to the 10-year Treasury yield and Bitcoin is in congruence with it, that means that people are purchasing Bitcoin as a risk off trade. Now, that doesn't necessarily guarantee this move. I'm going to show you why next. Boom, right here. We have blue, Bitcoin. In red, we have the NASDAQ, and in yellow, we have Ethereum priced in Bitcoin. Why? What am I trying to show you here? Bitcoin makes moves against, or Ethereum makes move against Bitcoin sell-offs, right? And what we're seeing is Ethereum moves up while Bitcoin moves down. They are operating inversely, as well as the NASDAQ. And what we saw when ETH 2.0 came out is that Ethereum became a stakeholder economy or monetary system. What does that effectively mean? Ethereum is an investment. It's purchasing an asset that is connected to a bunch of other products that are all speculative in nature. Ethereum is probably going to stick around. However, being base money and being a reserve asset, it has not proven itself to function as one. In fact, we are seeing it match risk on trades for 2021, and we are seeing it inversely relate to show that Bitcoin is a risk off trade, because we can see that the cash order flow or the cash flow into crypto starts with Bitcoin as the first mover, and it moves on down by market cap size. It goes into the microcaps, and then eventually those microcaps sell off and that money comes back to Bitcoin. So if you're not holding Bitcoin, you are effectively adding to Bitcoin holder value for those that hold Bitcoin and trade alts. They are investing into alts, but they are saving in Bitcoin. And so when they sell their Bitcoin, they're going into a risk on move into the smaller caps. And so we're seeing, at least in the crypto space, that this is a minor function of going risk on versus risk off. But since Bitcoin is hyper correlative to the 10-year Treasury note, this is a macro trade as well. People are moving out of the traditionally risk off simply because inflation is so high that they are willing to accept that the bond yield is actually bad for them. They are losing 5+%, 5.3 as of this month, holding a Treasury bond note. So if they're losing money holding a bond, they would rather be in Bitcoin. That doesn't necessarily make it a risk on trade. It is just a better risk to at least guess that you might make it. Now, when we talk about adoption cycles, the initial phases of Bitcoin's adoption cycles more speculative in nature. They were the large run-ups over and over, where we saw for four different cycles over the past decade that Bitcoin ran up, came back crashing down. And during those adoption cycles, we saw a logarithmic regression in price. Now, people think that this logarithmic regression in price is probably because it's just speculative in nature. However, eventually, when you hit around 16, 15% on the adoption cycle, something happens. The adoption goes parabolic. Currently, Bitcoin progresses with about 100% increase in total users of the network every year. That also increases your defensive line when the speculators move back out and into other assets. So once it reaches a critical point of adoption, it begins to act in a way where the market has no other choice than to accept it, and it moves drastically up. Now, does that mean that we're just going to continue to see blow off tops? Not necessarily. because here I show you the Amazon stock, I show you Microsoft and Apple and Netflix, and all of them are linked into this point and this point. So they've been adjusted for time, and they are in logarithmic progression. So if they are base 10 log, what I am showing you is that they went through these volatile cycles of adoption. But eventually, what would have been, if you had stopped the line here, what would have been a logarithmic regression then became explosively exponential on the final end phase of adoption, where once we passed that mark where people were actively using it and not just speculating on the stock itself, it created a massive amount of adoption overall. And you could apply this rate of adoption to many volatile assets. Something like cell phones didn't necessarily gain adopters and then lose adopters. They just got into the space and stayed in it. Bitcoin and stocks as a monetary asset have people flow in and out of them based off of their needs and based off their expectations. But what Bitcoin, I think, is going to do, and what it has been doing, is detach from the risk on trade and move into a risk off trade, both in crypto and in the macro space. And once this realization hits the rest of the market, because the market has been acting in a way that it does understand what it's doing, it just doesn't know that that's what it's doing. And so since it's become a responsive act to be defensive buying Bitcoin, eventually it will just accept the fact that this is not going away. And since we've already had this discussion as a macro case around the world that crypto and blockchain technology is here to stay, Bitcoin has cemented its place as a risk-off trade in the crypto space and will likely see itself continue to progress. If there was a collapse in market structure, but a continuation of inflation, what would occur is a drop in the 10-year treasury note, but then an explosive move up because the inflation is too high. And in order to seek yield anywhere else, they would have to move into monetary assets. So again, Bitcoin presents itself as a monetary asset and a hedge against inflation, which it has done an amazing job of in 2021. So, thank you for watching Be Great Economics. I have a 40-minute video that explains all of this in much more detail, but I think that 7 minutes is enough time for you to grasp the base concept and hopefully have a great discussion. Have a good day.